You've gone public. I love the ticker is MSP. Talk to us about the focus on MSP. Of course, this is a business that basically delivers tech via the managed service providers, right?
Yeah, this is a very unique story. Our technology is built for small and medium businesses as end users, but it's entirely delivered and supported by a global community of companies called managed service providers, or MSPs, and hence the ticker symbol is a salute and a tribute to them.
And so give us a sense here, I guess, of the demand picture right now. I mean, you've been around for quite some time, but I guess the conversation right now about backing up data, protecting data, recovering data has probably never been more fervent than it is this year. What's the demand picture?
Yeah, basically what's happening is small and medium businesses are demanding the same technology that enterprises have, but they need it in turnkey, simple solutions. And when they move their entire companies to be digitally transformed in the online world, they need to protect that data, protect the assets, all the applications. They want great networking. They want to remotely monitor and manage all of that. And we've offered a broad suite of services, software as a service, in that area for many, many years. And so the trends of this year, even in a pandemic, seem that they would only accelerate that digital transformation and the opportunity for our partners, which are the MSPs.
Tim, it was interesting that you mentioned small and medium-sized businesses. Those, of course, are the companies that have been really hurt in part by this pandemic. I'm curious what they're telling you about their spending habits, how willing they are to spend, and then how much of a priority, of course, this is, given, we're in the middle of a pandemic and revenue is squeezed for some.
Yeah, it certainly is in some verticals, and I would say emphasizing the small, not the medium. Most of our end users are probably skewing heavily towards the medium size. Managed service providers will go after the business for those end users that care about uptime, car dealerships, insurance companies, lawyers, doctors' offices, and so on. And so we have found our providers to be very resilient throughout this pandemic, and they're also very creative and entrepreneurial. And so any kind of change at all, disruption, will create opportunity for them, and that's created very good demand for our services. But of course, we all know that SMBs are the lifeblood of any economy, and they're the job creator and the innovators. And so, we hope to see more broader reopening soon, and of course some stimulus for SMBs as well, so we can keep cheering for those small businesses.
Tim, yeah, you service more than 1 million of those small and medium-sized businesses. Where's the competition coming from for you?
It comes from a couple of areas. In many cases, they might have rolled their own, as we say, where basically they're putting together their own technology and trying to do it in-house. But unlike enterprises who can sustain a CIO and a large IT department, even medium-sized businesses have found it very difficult to keep up. So the managed service providers become virtual. So in some cases, it's just a matter of one of our providers going in and pulling all their technology stack together. We do have a number of competitors, though, in each individual technology that we offer. We just tend to offer a broader range, and our lens is through the managed service provider. So we design it all for them to easily deploy and maintain versus having to maintain a wide variety of vendors in their stack.
All right, so your company getting a lot of attention now that it is a public company. A lot of secondary market investors are going to start kicking the tires to see whether this is the stock that they want to be in. What is the sort of, I guess, the selling point you think that investors would look to? Is this about the revenue growth story? Is this about profitability? Is it about margins? I mean, what's the general strategy here for creating shareholder value going forward?
Yeah, I would call it a growth at scale. We've come through now $500 million of recurring revenue in terms of ARR. We are a creator of technology, and the managed service providers are $137 billion globally, and that number, according to analysts, is poised to double over the next 5 years. Our TAM within that is about $28 billion and should grow at least that fast, if not faster, as we roll out new technology. So it's a growth at scale into a very large total addressable market with an incredibly unique channel. We are the largest pure play company serving this MSP industry, and when they grow, we grow.
And is it growth at any cost? What is the pressure to be profitable?
Yeah, we have been quite profitable in our history, and this year we actually expanded our margins. I wouldn't call it growth at any cost, but as you know, the public markets have been very receptive to software as a service, and we generally are going to be pushed by our investors to grow faster and defer ultimate maximum margins and profitability. So we've got enough profitability inherent in the model that we know we can get more international and launch new technology and still remain nicely profitable.